Tesla's stock has risen around 26,000% since the IPO back in July of 2010, long before some of today's investors were even old enough to pay attention. I'll keep this segment focused, but it's an important journey to revisit. In 2010, Tesla had only the original Roadster. That car was essentially a proof of concept, an experiment to demonstrate that you could actually build a legitimate high-performance electric vehicle that wasn't just a quirky science project. Sure, it wasn't mass-market material, but it was proof that the idea had legs. Investors saw potential, the company went public, and capital was raised. But from that moment on, the question became, could Tesla follow through? The next model had to succeed, or Tesla was finished. That car was the Model S, and when it launched in 2012, it didn't just meet expectations, it blew them away. It won nearly every award in the industry, earned global recognition, and proved beyond any doubt that an electric car could be not just good, but the best car in the world. This was a pivotal moment. Still, the stock didn't immediately reflect that. From the IPO through late 2012, Tesla shares essentially drifted sideways. Then investors suddenly woke up to the reality. The Model S wasn't just good for an EV, it was extraordinary, period. The stock rocketed 4, 5, 6, 7 times higher in less than 2 years. Nearly a 10x run, purely on the strength of the Model S. But then came the lull. Investors began doubting again. Yes, the Model S was selling well, but Tesla wasn't showing consistent profits. People underestimated what would happen once Tesla scaled production, improved efficiency, and drove costs down. Instead, the dominant narrative became, Tesla will never make money. Bankruptcy is inevitable. And so, despite the launch of the massively successful Model 3, Tesla's stock price spent years doing little. From late 2013 to mid-2019, shares moved sideways, volatile but without real progress. It was déjà vu, people doubting, waiting, refusing to look forward. Then came the turning point. In 2019, Tesla's quarterly reports finally began reflecting what had been obvious to long-term thinkers. Scaling production and achieving economies of scale meant profits would inevitably follow. Suddenly, the story flipped. By May 2019, with the stock at around $12 split adjusted, I sold nearly everything else I owned and went all in on Tesla. The timing was uncanny. The stock then launched into one of the most extraordinary runs in history, up 3,200% by November 2021. Investors finally grasped that not only was the Model 3 a smash hit, but the Model Y would be as well. Since then, though, Tesla shares have pulled back meaningfully from their 2021 peak. Today, we're experiencing something reminiscent of 2013 through 2019. High volatility, plenty of skepticism, but essentially sideways action. The narratives keep changing, but the skepticism is familiar. First, it was, the Model S won't work. Then, the Model 3 won't scale profitably. Now it's, Tesla is late to autonomy. Vision only can't succeed. Waymo leads and robo-taxis are a fantasy. The pattern is clear. Investors doubt until reality forces them to acknowledge what's happening. The big question today: what happens if Tesla successfully scales a massive robo-taxi fleet? The last time Tesla reached an inflection point where profits began compounding, the stock jumped from around $12 a share to over $400. It's impossible to predict short or even medium-term movements, but history shows that zooming out makes volatility irrelevant. Since 2010, Tesla's stock story has been the same: skepticism, disbelief, and then sudden realization. Over and over again. Let's ask a rhetorical question. Where exactly was the smart time to sell Tesla stock? After the IPO? After doubling your money by early 2013? That would have cost you the next 15,000% in gains. Maybe you bought after the Model S proved itself at $209 and then sold during a pullback because you thought you were being cautious. You'd have missed what came next. Maybe you sold after the 500% run-up in 2013, thinking you were locking in profits. Or maybe you sold during the COVID crash, or in early 2023 when the stock was near the lows. Each time, Tesla eventually went on to trade higher than the point where sellers exited. The reality is that nearly every investor who has sold Tesla stock in the last 15 years has eventually watched the share price surpass their exit. The exceptions are only very recent, so the real long-term question isn't about volatility or timing. It's this: what if Tesla does succeed in scaling robo-taxis? What if it truly dominates autonomy, combining scale, data, and cost advantages into an entirely new, ultra-profitable business model? That wouldn't just be comparable to today's ride-hailing market. It would be far bigger, because lower costs mean more people can access the service, expanding the market itself. That would transform Tesla from a hardware company selling cars into a high-margin, AI-powered platform with software-like economics. For newer listeners, I should add, I began buying Tesla stock back in the low teens, split-adjusted. I added in 2016, 2017, 2018, 2019, 2020, 2021, 2022, 2023, and I'm still buying today in 2020. Not because of what's already happened, but because of what I believe is coming in the next decade. For context, I launched this YouTube channel in November 2019, when Tesla traded around $22 a share. Back then, I said it was still early. Today, I'd say the same thing. Every stage of Tesla's stock history has followed the same rhythm. Tesla says they'll do something. Investors scoff. Tesla delivers, and only then do investors reluctantly accept reality. We saw it with the Roadster, the Model S, the Model 3, and the Model Y. Now, the same cycle is unfolding with autonomy and robotics. Investors say, not possible, it'll never work. And yet, if Tesla proves them wrong again, the story could repeat. For transparency, I'll add, I haven't sold a single share since I began buying over a decade ago. Of course, I've built my strategy so that I never have to sell unless something truly catastrophic forces it. I reassess constantly, looking at Tesla, its competitors, the market. If things change dramatically, I wouldn't rule out selling. But so far, I've never found a risk-adjusted opportunity that looks better. And that brings me back to one last thought. Many who sold Tesla years ago probably never imagined the company would look like it does today. That's the risk of underestimating this story. If history is any guide, Tesla has repeatedly proven doubters wrong. And the cycle may not be over.